right, I believe we may be live. Can you all hear me?
I hear you.
All right, perfecto. I'm happy that we're live, man. Hopefully there's no echoes or anything like that. And if anyone is following us right now and you do hear any echoes, please, by all means, let us know. Just send us a chat, message, and we'll be sure to fix that for you. But nonetheless, we're super glad that everyone is here today. I'm excited, most importantly, primarily because I didn't have things like this when I first set out in my career, right? Let me give you a quick story. So about 16 years ago, when we actually officially started nDemand Consulting, everything was bootstrapped. Everything was by the seat of the pants, was crossing my fingers and hoping I was making the right decisions. And I never thought about actually talking to an attorney and talking to someone about legal consultation on how I go about setting up a business, why I'd want to set the business up that way. And most importantly, what does this mean for me in the long term? So we're fortunate enough to have Karen Sabatino with us today. Karen's been with us now just a little bit over a year with nDemand Consulting, and she's also got her own law practice as well. So Karen, how you doing today?
I am great. I'm very happy to be here. This should be fun.
Excellent. So yeah, why don't we kind of jump straight into it? Folks that are watching right now, we have some slides that Karen's going to go through. I'm going to be driving there on my side. If you have any questions during this presentation, please, by all means, stop us. Ask us questions. You can post right on the bottom as you would on any other live. We do see those on our end, and we'll be able to answer those things accordingly. Okay? All right, so let me go ahead and get ready to share my screen, and we will dive right in. I know some of you guys may be on lunch breaks, so we want to make sure that we're respectful of your time and keep this within a tight window. So here we go. Let's see. Should be able to see my screen now. All right, now let me just maximize, and we should be off to the races. All right, Karen, can you see my screen now?
I see it.
Excelente. All right, so why don't we go ahead and get started, and if you have anything that you need for me to chime in on as well, I'll be more than happy to do that too.
Okay, great. Well, the first thing is that, when we put the series together, we wanted to think about what topics you would want to know. And so I thought about, starting up my own law firm, and then there's another company that I've been setting up together with, 3 other people. And what were the things that I thought were important to think about early? And kind of like Oscar said, you don't always think about these things early if you're not a lawyer. So that's kind of why I wanted to share it. The first one is, what kind of company do I want to be? There's lots of different types of companies, and starting off with the right structure can really help you down the road when it comes to things like taxes and paperwork. So that's why we picked the company structures topic as our first topic. And then the next slide kind of talks a little bit about me, because I thought y'all might want to know who I am. I worked for Georgia Power for 30 years. So 1989 to 2019. So I've been independent now for over a year. Obviously, I'm legal counsel for nDemand, and Oscar is great. I'm also legal. He's my favorite client. Yes. So I'm also legal counsel and a board member for Corrupted Media Productions, which is a video game development company. So that's been a lot of fun, because that's a very, very different business. And that's one that I was in from the very, very beginning too. It was like Oscar said, he was a company long before he met me. I also work for TurboTax, and that's about 1/3 of my time, which has actually been incredibly helpful, because all the things I see people running into and having problems on their taxes has helped me think about how to get ahead of those problems when you're starting up your company. So that's been a really good education. I also do real estate closings. I do mortgages. So I've learned a lot about that as well. A little bit off topic for this, but still, very relevant about thinking things through. And I'm also a board member for a nonprofit, which again, thinking about nonprofits, you don't usually think about nonprofits when you're thinking about businesses, but actually you can make money in a nonprofit. And again, that's, another thing to think about. Again, I'm a lawyer, I'm an engineer, and I have a business degree. So that's me. So the next slide talks a little bit more about what are the things you want to think about. And so kind of what we were saying is, early on, you wanted to start making money and doing your business, right? You don't really want to think about your company structure. But there's a couple key things that you probably do want to think about. One is, what's the cost to become a company? Because some of these are free and some of them aren't. So that's a big issue. The complexity, do you want to have to deal with complicated record keeping, complicated taxes, complicated bookkeeping, requirements to have minutes and board meetings and all that, or do you not? So that's another thing to think about. Taxes, I mentioned, that's a huge one. You never think about that day one. But about a year after day one, you do think about that. So, and that's where I've really learned a lot in talking to people. Advantages and disadvantages, obvious one, and then financial flexibility. If your business is going to be very linear, money coming in on like a monthly basis as you spend it, that's one type of business. If your business is going to be lumpy, kind of like this video game development business I'm involved in, where they're not going to make anything the first year, but then when the game launches, they're going to make a whole lot. So that's a different thing to think about. So those are kind of the different structures. And then the next slide talks about kind of a listing of the ones we're going to cover. And I listed them kind of in order of, at the top is the very easy structure, down to the bottom with the more complex structure, and then nonprofit, just because that's kind of a wild card, but there's some places that a nonprofit is actually a very, very good structure. So go ahead and move on. And we're going to talk about each one of these. And I could jump in at any time, because this is one where I think you're a good example. The most simple structure that everybody starts with is a sole proprietor, because that just means I'm doing work, I'm getting paid. I'm not a business at all. And technically that's what I am right now, is a sole proprietor. Single member LLC includes married couples, which is something a lot of people don't know. If you're a LLC with one person, it's very easy, right? It's very similar to being a sole proprietor, but a married couple from a tax point of view counts as a single person. So that's actually a very easy structure. And if we jump to the next page, we can kind of see a little bit about how this plays out. So Alaska is an example of starting off, and actually you might have started off as a sole proprietor. When I met you, you were an LLC. So why did you decide to do that?
Yeah, as a matter of fact, we did start off as just being sole proprietors. We didn't really know what to do. So what we were doing is people were asking us for business plans, or for us our help in consulting, and we didn't understand that when we're bringing in that income, it needs to kind of go and flow through some kind of a corporate entity. So yeah, we did find ourselves kind of just being sole proprietors, kind of collecting money, and then when it was tax time, we really didn't know what to do next and stuff. So this is spot on. And we finally got incorporated with our LLC shortly thereafter, when we learned a tough lesson about being careful about how you actually formulate your business. Yeah, and then so like we're saying, tax is one issue. From a tax point of view, you use a Schedule C, and it talks about taxes, filing requirements. Schedule C is done on your personal income taxes. So if you're a sole proprietor or a single member LLC or a married couple LLC, you don't actually have to file a separate business return. You can do your taxes right on your personal taxes on Schedule C. That's one that actually in my tax business, I ran into a married couple who ended up owing the government lots and lots of money because they didn't know that. And they tried to file as a multi-member LLC, did it wrong, had a whole bunch of penalties that they could have done the whole thing on their personal tax return, and they didn't know it. So that's the kind of thing that's very important to know, is sole proprietors, single member LLCs, married couple LLCs, your taxes are done on your personal return. Now, liability is the big issue though, because a sole proprietor, like for me, for example, I have malpractice insurance for my law firm, but my house is not protected at all from my business. It's all the same. That's why I like my malpractice insurance, right? Because if something happened and there was a problem, my house as an asset is part of my business technically, because it's one and the same. Whereas with an LLC, you can start to separate that. Yep. And that's the advantage of the LLC. Yep, and Karen, if I can lean in just a bit there to kind of break that down a little bit further. One of the things that can happen when you're setting up your business, let's say, God forbid, you have executed a body of work for a client, and they don't like it, or something happens when you then have to potentially go into some kind of litigation, or perhaps you're getting sued. To Karen's point, the risk behind with the sole proprietorship side can be that they could potentially sue and then go after your personal assets because they're not actually protected. I think there's also something, and Karen, keep me honest, but I think there's something called like piercing the corporate veil, and that's only in very unique circumstances, and that's once you've actually incorporated. So but that's something we probably could talk about down the line. But I've just heard of those kind of things. Have you seen stuff like that, Karen? Well,
I want to clarify that a little bit. Piercing the corporate veil isn't just for a corporation; it's for an LLC too. Okay. So if you're separated into an LLC where your business is your LLC, but you own your assets separately, you can still, quote, pierce the corporate veil to get to your assets. So an LLC is not a perfect protection. An LLC is not a corporation. An LLC is a company. Yep. And a corporation is a much, much better separation of assets. But piercing the corporate veil is also for LLCs. How you separate yourself is you have to have separate bank accounts and separate record keeping, separate everything. So the further you separate your assets, your business from your personal, the more protection you have from the piercing the corporate veil. However, that again leads to complexity, right? If you have to have separate bank accounts, separate everything to keep your business separate, that makes it harder to run. So it's a balance. Liability is really all about balance for this situation.
Absolutely.
A couple of things to think about here is self-employment tax. For sole proprietors and for single member LLCs, you pay self-employment tax on all the money you make, 15.3%, right? So that's not small. Now, there's a couple ways to get around that based on certain things. Like, for example, my work as a mortgage refinance person, part of it is notarizing. And believe it or not, notaries don't pay self-employment tax. So I can actually get out of a little bit of self-employment tax because part of my work is as a notary. So there's some little unique things about your business that if you know what your business is, you can think about, what structure works for you. That's actually why I've remained a sole proprietor, is because it actually helps me on the taxes to be able to, discount the notary part.
Yeah.
The other negative about both of these is that you have to consider your money for tax in the year it's earned. You can't retain money in your corporation for future years without paying tax on it. Which again, if you're spending at the same rate that the money's coming in, so you're pretty much a net zero at the end of the year, not a problem. But if your business is lumpy, where maybe one year you don't have any income, the next year you make a lot of money, like back to my video game business analogy, that could be a problem because then you might have a huge tax liability in a year and you can't spread that over years. So
absolutely.
A couple of things to think about.
Sure. Really, really quick, if I could just pause you. And sorry to pause, but there's a couple of quick questions that did already come in, and I wanted to make sure that we talked about those. Pat had one of his first questions here. What steps do you have to take when you have international partners in your business when it comes to taxes? Do you have any thoughts on that? And I know you're not necessarily a tax attorney, but just
I technically am a tax attorney.
Okay. So good. So give us some feedback on that if you can. Pat,
well, I mean, the main thing is you treat them, there's a lot of wiggle room in this answer because it depends on what's going on in your business. You would treat them pretty much like domestic entities as far as like if you issue them a K-1 or something like that, their taxes would be paid in the other country. So I guess if they own assets here and they belong here, they would pay taxes here. If they own assets in another country, they'd have to pay in that country. So it's kind of a bit of a vague question, I guess. I would need to have a little more specifics to know how to answer it. Yeah. But for the most part, you treat them the same if they're a U.S., if they're a foreign company, but with a U.S. presence, you would treat their U.S. presence. Yeah. If it's an industry where they're, totally separate, then that may be a different answer. So
got it.
Probably can't give a better answer without knowing a lot more details.
Yeah, absolutely. And Pat, for a question. And yeah, this will be available after this session, so you'll be able to kind of go back through it. And then if you have more questions, feel free to just shoot us an email, man, or up at the very top on my right, maybe on your left side, but it's going to say text the word Oscar to 678-672-1444. We can have a text message communication that can get you in contact with Karen, and then you guys can talk about that further.
Yeah, that sounds great.
All right. Thank you, Pat. Let me go back to you. I'm sorry about that. When I saw that coming in, I wanted to make sure he got his answer. I know it's during the lunch hour. 1 second, guys. Let me get it back to what we had going on there.
I think we were ready to probably move on to the next, section of types of businesses, which would be where we're talking about the multi-member LLCs and partnerships. Yeah. So we can move on to the next slide.
Okay.
So multi-member LLCs and partnerships are actually treated kind of the same. And partnerships, Oscar, you can go on to one more slide. Partnerships are a little different. So partnerships, I'm putting just partnerships on here, but really there's lots of different types of partnerships. There's like limited liability partnerships. So you can get into some nuances. So I didn't want to get into that level of detail because personally, I'm not a big fan of partnerships, mainly because what if you and your partner stop agreeing on something? You have to split everything down the middle. You're liable for your partner's activities. If your partner does something wrong, you're both liable for it. Yeah. So I'm not a big fan of partnerships. The multi-member LLCs, you have a little more structure, where if your partner goes one direction, you go a different direction. You have a contract, you have an operating agreement between you that governs how to handle it. So that's why I didn't put too much effort into partnerships here. But multi-member LLC, and again, married couples count as a single person. This is a multi-member that is not someone you're married to. Filing fee for LLC, which that's the same for a single person LLC. Here in Georgia, it's minimal. Some states, there's like an annual filing fee. I know in California, it's actually pretty significant. So, that's a factor to think about. Back to the piercing the corporate veil, though, you need to separate things. So you've got to be really careful to have separate bank accounts, separate financial tracking, to keep the LLC separate from the individuals. If you don't do that, you don't get the liability benefits of the LLC.
Karen, what's your thoughts on, I've heard of commingling, and I'm sure sometimes, folks that are just getting started, they may, to your point, it should be separated out, but at times they may using that same bank account that they're making money from their LLC, but using that also for, groceries or going out and drinks, et cetera. What are the implications behind that with commingling?
Well, you destroy your liability protection. So the whole point of being an LLC is to limit your liability. If you commingle, which means not separating everything out, you kind of destroy that. So why bother being an LLC if you're going to do that? You might as well just be a sole proprietor. That is the real benefit of the LLC, is that it gives you the ability to separate, but you actually have to separate. Which is back to the whole diligence, right? If you're not, if you don't have the self-discipline to do that, you need to think about, okay, do I want to accept that risk or not? Obviously, it's better to have the self-discipline or to have someone working with you who has the self-discipline. Like the video game company I'm working with, none of them, they're all young men. None of them have the self-discipline to separate things. So the role I play is reminding them, okay, here's how we have to keep the records of how the money went, and no, it can't be in your personal whatever, it needs to be here. Have a separate bank account. Separate bank account has fees, but you have to pay the fees because you want to keep the money separate from your personal money. So yeah, but commingling is definitely something to be concerned about and to think about from a risk point of view. So let's see, and tax-wise, an LLC, a multi-member LLC, and a partnership both file a partnership return. So you're having to file a separate tax return from your personal return, which adds a level of complexity, but it's not that hard. I mean, you can do it yourself, or if you know somebody who has basic skills of understanding how to use a TurboTax type product, you can do it yourself. But these two, it steps it up a level in that you're filing a separate tax return for the company, and then you're issuing yourself a K-1, and then the K-1 is how you put it in your own taxes. So a couple of things happen there. You are able to, you're able to structure it a little bit more, I guess. You can say, like, I own this percentage, you own this percentage. You have an operating agreement that lays all that out, but the money that comes back to you is still taxed like a sole proprietor. So you still have to pay self-employment tax on it. I didn't talk about QBI earlier, but QBI is qualified business income. That's actually a tax break that we get now on our federal taxes, 20% of your profits, which is great for a lot of business types. That came from the Tax Act of 2018, I think. So that's actually one of the advantages you get on this. Okay, any questions on this one, or should we move on?
No, I mean, folks, folks are tuned in. If you have any questions, by all means, chime in, ask the questions. We'll get it posted up on here, so folks can look at it. We'll get Karen to answer it, or I can try to chime in as much as I can as well. So feel free. But Karen, I don't have any questions about this slide. We can move on if you're okay with that.
Let's go ahead and move on. Okay, and then the S corps and C corps. So now we're getting into corporations, right? So up until now, we have not been corporations. We've just been companies, and that's a misnomer. A lot of people think like an LLC is a corporation. It's not. It's a company. It's not a corporation. S corps and C corps are your main types of corporations. We'll save nonprofits for the end. So the next slide goes into the details of S corp versus C corp and how they're different. I put a lot of research into this for the video game development company that I'm working with to try to figure out what was the right structure for them. So it's just very recent in my head going through all this S corp stuff because I decided they should be an S corp. A lot of the logic is, first off, you do have to pay more filing fees, and I just did it for them, so I put it on the screen. In Georgia, $210, not that much to get it started up. That's pretty minimal. $50 a year. Again, not that high. It's something. If you're starting up a company, I know you may not have any money, but it's not that hard. You can do this yourself. The Secretary of State website tells you how to do it. My recommendation is always going to be to have a lawyer do it, mainly because I'm a lawyer. However, if you're the type of person who can handle the DMV, who can handle your own taxes, can handle all that kind of paperwork, you can do this yourself. You just have to go to the Secretary of State website and it walks you through it. So the key thing here for companies, for corporations rather, both S and C Corp, is you have to have a lot more structure. You have to have a board. You have to have board meetings. You have to keep minutes of those board meetings. You have to have what's called books and records. You have to have shareholder agreements, all that kind of stuff. So there's a lot more overhead here. It's not just I'm doing business and putting the money in my bank account. Advantages, though, is that for the S Corp, well, really for both of them, your money is separated. For the S Corp, you pay yourselves, the people who do the work, on a W-2. So you're like a regular W-2 employee for your company, but you only have to pay yourself what like an average person of your type of job would make. So if I say, the average XYZ, say video game production person makes $50,000, but really they made a whole lot more that year, you can pay the rest of it as what's called a distribution, which think of it like a dividend. And the advantage there is you only pay income tax on it. You don't pay that 15.3% self-employment tax. So you can end up saving 15.3% of tax on a chunk of the money you make if you're making money, right? If you're not making any money, it doesn't matter. But if you have the type of business where maybe in a year you may have a huge profit, in a different year you don't, it gives you the ability to not have to pay as much tax on that larger profit. So that's one of the big advantages. And I'm talking about S Corps now. The other advantage of an S Corp is that you have shares and you have shareholder agreements. So it's a lot easier to get investors. With an LLC, if you want investors, they can give you loans. You can work them into your membership, your operating agreement. But it's a little harder to handle investors. Investors aren't going to want to invest in an LLC because it's a little more wishy-washy. In an S Corp, you actually issue shares, just like you would in a C Corp. C Corp being, like a Wall Street type corporation, large corporation. In an S Corp, you're limited. You can't have as many shares. You can't have types of shareholders. A company cannot own shares. So if I'm another LLC or an S Corp, I can't buy shares in S Corp. I have to be an individual. But it gives you the ability to sell shares. So my example with this video game company is we've actually sold shares to a bunch of people to get the money to get the beta going. And then once, the beta hopefully becomes a production product and, makes a lot of money, those shareholders get paid back plus. So it gives you the ability to do shares, which an LLC doesn't. And you have much, much better protection from liability. The whole piercing the corporate veil thing is much harder on a S Corp or a C Corp because you have total separation of assets. No one person owns the company, right? There's a board that governs it. There's shareholders that all own percentages. So it's very, very different than an LLC where it's pretty easy to get through the LLC to the owner. C Corp. So C Corp is a traditional company. S Corp is like a small company. C Corp is a traditional corporation, not company, corporation. Filing requirements are the same, and you still have to have a board and all that. The primary difference is two things. One is taxation. In a C Corp, you have what's called double taxation. So the corporation pays taxes, and they pay a corporate tax rate. They issue a K-1 to the individuals who own it, or W-2s if they're paying employees, but K-1s to the investors. The investors pay tax on that. So the corporation's paying tax, and then the employees and investors are paying tax. The difference on the S Corp is the corporation doesn't pay any tax at all. It all flows through just to the investors and employees, and they pay tax as investors and employees. But the corporation itself doesn't pay any tax. So in S Corp, you're saving some money because you're not having to pay the extra tax. C Corp, you pay more tax, but then you also have some advantages. You can have different classifications of shareholders. So you can have, I'm a partner in one of the companies I do real estate closings for. I'm actually a partner in their C Corp, but I'm a non-voting shareholder who only receives certain things. So you have the ability to do that, whereas in an S Corp you don't. The other really big difference for the C Corp is that you can retain money in your bank account for the corporation across years without distributing it out to your shareholders and without your shareholders being taxed on it. So that's an advantage if you want to do more of a long-term, long vision type of thing, where you want to be able to invest for longer periods of time, keep money in there, and kind of insulate your shareholders from having to pay anything unless they actually sell their shares. So that's kind of the big difference between these two. Did we get any questions on these?
None in the group, but on the live. But I can certainly give a point of reference here. Last year, our organization, nDemand, we actually just switched over from an LLC to a C Corp. And it was
why did you do that? I'm curious about that.
Say it one more time.
I'm curious why you did that.
Yeah, so we're looking at setting up board of directors, and we're also potentially looking at starting to do some shareholders and some investment type opportunities on some of the different products and artificial intelligence and data analytic products that we're going to be rolling out this year. So we had a lot of conversation with our tax accountant and our CPA. We did a lot of thoughts. We had a lot of thoughts, if you will, internally about making that kind of a decision. Because I mean, to your point, Karen, it is a lot more paperwork, and now it is more double taxation. But then we're starting to think about some of the global things that we're doing now. In my mind, we need that board, right? We need that board of directors, and not just kind of like makeshift, but ones that are actually shareholders and actually have some level of investment, if you will, into the business. And so right now we're looking at about 5 individuals that our publicist is working with us on right now, solidify. And this is why we did it. We also have seen in the past where mistakes can be made, right? Where you may mistakenly decide to be in an LLC and then you run into some problems, or maybe like to your point about partnerships and things don't work out. How does that end? And it's just a lot of that kind of stuff that we want to make sure that we avoid as well. But primarily, Karen, it was for our reasoning for wanting to get it started was based upon us moving more into shareholders and a board of directors.
Yeah, and that makes a lot of sense. And I mean, you can do shareholders and board of directors with an S corp too. But the S corp, I think the big difference for a company like you, if you're looking at more maybe longer term vision type things, is being able to keep the money in the account without having your investors having to pay tax every year on it. Because that's one of the negatives for the S corp, is that if the company makes money but doesn't want to distribute it to the investors, wants to keep it in the account for some kind of future investment, the shareholders still have to pay tax on it.
Absolutely.
So because the company's not. So what you do is you do distributions to the shareholders to cover the amount they owe. So that it doesn't really hurt them when they do their personal taxes. They put in, they made this much on distributions, they owe this much, it nets out. But with a C corp, you kind of miss all that. If you don't pay out dividends and the people don't sell their shares, there's really no tax impact on them at all. Which is kind of like the traditional Wall Street type companies you think of. So it gives you that ability, which I'm thinking you're probably going to need for some of the bigger ventures you want to do.
Yes, ma'am. Absolutely. Absolutely.
Okay. So the last page, after this one, the last page is about nonprofits. And I wanted to bring up nonprofits. Oh, one more slide. I wanted to bring up nonprofits because this is one that people don't really think about, but it actually has some advantages. And I've met a couple different people who started off their companies as LLCs thinking that's just what you do. And then later on, they're like, well, gee, really, a nonprofit actually meets my needs better. You think a nonprofit doesn't make any money, right? But the reality is a nonprofit pays its employees. So if you're in a business that people might want to make charitable contributions to, or people might want to be able to write off, what they're giving you. Maybe it's some kind of an arts business or some kind of a cultural type thing, or the ones I was actually thinking about were more like martial arts type studios, where it's something that you could say this is an education type activity. You can pay your employees, so you can still make money. You can pay yourself to run the business. Just at the end of the year, you can't have made a profit. And you can actually have made a profit, which if you do, you pay a very high tax rate on it. I'm on a board for a nonprofit that's a homeowners association for a historic building. So we have a lot of expense paid in maintaining our building, very different than your average homeowners association because we're essentially maintaining a museum. And so, we're a nonprofit, but at the end of the year, if you make money, like in our example was movies get filmed in our facility and we made money that we didn't manage to invest back in fixing up the infrastructure to make more movies. So we ended up having to pay tax on it. So you do have to be very, very aware of your finances because you can pay tax in a nonprofit. The design is that you don't. But the main advantage of a nonprofit is that you can get a lot of tax breaks on things. And you can get people to donate to you. So if, instead of someone just paying you for a service, maybe they can donate the money instead. They're happy because it's tax write-off for them. And depending on what it is, it may totally qualify as a donation. Like if it's a membership fee to be able to use the facility or whatever it might be. So nonprofits is another one that's worth considering depending on what type of business. It's obviously got to be something that qualifies to be a nonprofit. A nonprofit's a corporation, just like an S corp or a C corp, but you file an extra IRS form to become a nonprofit. And then you get your 501c3 status and people can donate to you. One of the key things here is that you have to every year keep your paperwork done. I actually did a little work, unpaid work a few years back, helping out a theater that had forgotten to file their paperwork. And so they had lost their nonprofit status. And again, it's fixable. You can go back and do the paperwork, but it's one of the things that you have to have somebody involved who knows how to remember to do that, because you can't keep taking charitable donations and letting the people who donate write the money off if you don't keep your nonprofit status. But again, it's another alternative, and it's one that I think a lot of people don't think about. Yeah. Any thoughts or questions on that?
I remember before we actually incorporated nDemand, we had started a 501c3 nonprofit. It was called Sound Decisions, Resources and Development Services. And, when we had it going, it was definitely something that was really beneficial. We did receive, tax deductible, donations. And some folks, on the corporate side, they look at that as a strategic play for them as well, right? If they need to kind of, balance out, their books, if you will. Sometimes that happens, right? Where they may donate a lump sum of money at the end of the year, or the beginning of the year, or throughout the year. But for us, it was definitely a very good experience. We enjoyed it. It was more of like a heart work sort of scenario. But I will say this, and Karen, I love what you said a moment ago around the importance of making sure that you still can make money in the nonprofit. So as consultants, one of the first things we usually ask a group that wants to do heart work, or they want to be able to do something that they're passionate about, is how is it going to be profitable? And most of the times they're going to say things like, well, we're going to do it as a nonprofit, but how are you going to eat? How are you going to survive?
Exactly.
And those are the questions that we begin to ask a lot of our clients as they come in looking to do, nonprofits. I really wish I had this kind of information before, because I really just didn't know. I didn't understand some of this stuff before, but so glad that you're offering this kind of information right now. Thank you.
No problem. Yeah, this has been the last couple of years, I've spent a lot of time on this just because of, my background with Georgia Power. I wasn't as involved on the front, but I was kind of doing a lot of side things. And then the last year and a half or so, I've been very focused on this. And it's been really an interesting journey. And there's a lot of books you can read too. You don't have to go to law school to learn all this. There's a lot of different books out there and websites that if you just spend some time researching and reading. I took a week. I was on vacation, I guess, a few months back, and I actually, brought a book with me about S corps and read the whole book while I was on vacation. And everyone else thought I was crazy. It was actually very, very interesting to learn just how do all these different things work together and how do you optimize. So
absolutely. Not only is it critical, if you're looking to actually gain some level of traction within your business, it's almost absolutely critical. I mean, like it's almost like zero option, right? If you're not preparing yourself, to learn your craft and to learn exactly what it is that you're trying to do, there's a very good chance that you may, fail down the line, right? And it's unfortunate to say it so bluntly, but if you don't perfect it, you don't learn what it is that you need to learn about your business. That means sometimes Googling things, reading books. Guys, I know a lot of folks that follow me, you probably see that I'm always posting some kind of a new book, some kind of a new something I'm reading or something like that, man. It's because I really give a damn about what I do, and so you have to have the same kind of tenacity, if you will, to make sure that you get it done. Now, we do have a couple of other questions that came in. One from Deontay Shaw. I know him as DJ Fame. Let's see. Let's go and post this on here. Let's see. All right. Is it good for a business to change its ownership structure type anytime during business?
Yeah, and it is. Obviously, if you recognize that, what you're doing now, what you started off with is not where you need to be now, absolutely. My recommendation, though, is do it with the calendar year. Do it on January 1st, because it makes the accounting and the tax a whole lot easier. If you can say, I was an LLC this year, I'm a C Corp this year. Doing it halfway through can be a challenge. So what I would say, one of the things I like to do is every year, before it comes time to do my taxes, essentially simulate my taxes in the previous year's software to kind of figure out where I'm going to be, to figure out, okay, what decisions do I want to make by the end of the year so that the next year I'm prepared. Because I actually thought really strongly after doing all this research on S Corps to support corrupted media productions, I looked at, my own law firm, I'm a sole proprietor. I've been a sole proprietor for, a couple of years. Do I want to become an S Corp? Do I want to become an LLC? What would the impact be to me? Because if I was going to change, I was going to do it on January 1st. And so I think it's smart every year to kind of look at that and say, okay, well, where am I? Am I paying excess tax? Is there some liability issue I want to handle? Kind of what do I want to do? But definitely on the calendar year. It's just much easier to manage.
Yep. And we got another comment here from Danielle Gouda. one of my good friends from college, man, and my wife's line sister, man. Let's go and show this one really quickly. Let's see. Hello. I came in on the tail end of not being able to retain money on an LLC and continually paying taxes on that money each year. I may have misquoted that.
Yeah, and I think that's the same thing about, and I've actually dealt with this in my tax attorney role. I had one person one time who got a grant to his LLC, and he got the grant in December. And so it became taxable income because he hadn't spent it in that same calendar year. So it became taxable income for that year. If he had gotten the grant in January and had been able to spend it that year, it wouldn't have been taxable because he would have had expenses to offset it. So I'm not sure that's what you're asking about, but my guess is that's the type of thing you're talking about. So yeah, that's why thinking on an annual basis as far as how your tax works is really important. If money is going to come in, you want it to come in early in the year if you're an LLC. Now, if you're a C Corp, that changes things. Then you don't care. Money can come in anytime because you can kind of, and it still matters. I don't want to say it doesn't matter, but you have a lot more ability to be able to swing past the calendar years for your decisions. I think that's what you're asking. I'm not totally sure.
Yeah. And Daniel, sorry, I saw the one about 5 minutes late on that one. I apologize, but if that didn't answer your question, you know how to definitely find us. Just give us a call, man. We can talk more about it. But I think we're right at our time now. We do have a lot of exciting new things that we're going to be talking about in the months to come. Let me just share that really quickly as well before we adjourn. Let's see here. So let me maximize this really fast here. All right, so it looks like, and Karen, I don't want to steal your thunder. Please, if you want to kind of walk through some of the things we're going to be talking about in our next series as we go through the months here.
Yeah, sure. We're looking at doing these once a month. And, and again, based on feedback, we can adapt. But I walked through, after talking with Oscar about, this series and what we're trying to accomplish with it, I went through and thought about the top 6 topics for the first 6 months. First one was today on corporate structures. Contracts. Obviously, contracts are important. The last thing you want to think about when you're starting up a small business is contracts. However, some matter more than others. And so what I was hoping to focus on is what are the key contracts you need to make your business successful and prevent problems down the road. You don't need contracts on everything. And again, they don't all have to be super high end, but to kind of focus there. Next one's intellectual property, which actually that's what I used to do back when I worked for the power company, was intellectual property. And what do I need to do to protect my investment? Because a lot of the companies we're talking about are going to be developing technology. And technology is kind of wishy-washy, right? You can't just, lock it in a closet and say it's mine. So what do you need to do to protect that investment? And you can spend a lot of money or you can spend a little money, kind of where's that happy medium? Manpower, a lot of risk associated with manpower. Do you do W-2 employees? Do you do 1099 employees? How do you protect against liability issues? So that's a topic in and of itself. Taxes, and I kind of teed that one up today. Obviously, that's a huge one. And then record keeping. And we kind of touched on that today about keeping accurate records is important. How do you do that? And how do you do it without spending a fortune? What are some lower cost approaches about, again, what matters, what doesn't? So that's the first 6 topics.
Yeah, so hopefully these things, make sense. Daniel, I saw that you kind of got it there. So thank you again for your question there. And hopefully, we can, we're always available to you, man. Just let us know whatever you ever need, man. So we're actually about 8 minutes over, man. So we just wanted to, again, thank you all so much for tuning in today. Hopefully you all had a good, healthy lunch during this lunch and learn. Karen and some of the other folks know I'm on this whole health buff journey at this point, man. I was becoming a little bit of an little Easter egg walking around, man. So I've been trying to learn more about ways to eat healthy and such, man. So hopefully you all had something healthy. We'll be doing this again the first Tuesday of next month as well, man. So love you all. Thank you so much. Karen, thank you so much for jumping on this with me. I learned a great deal from you every time I talk to you. So I'm sure that the listeners certainly learned something from you as well.
Oh, great. This is fun. I love doing this type of thing. So happy to help.
Excellent. All right, y'all. Everyone take care. Have a good one.